Good morning. Wow, weird to be here. I'm back in my old time slot. How's everybody doing? I'm Neil Hamilton. I'm new here at Benzinga. A lot of you probably don't know me. They keep me in a closet underneath the Benzinga headquarters. How's everyone doing? Give me a 1 in chat if you're feeling good about trading today. I actually want to get my chart open. Hard to actually trade while doing these shows. Let me see. Oh, my favorites are down. Airbnb, Unity, Palantir taking a little hit, LAC taking a little hit, but MTTR is up, baby. Those leaps are working out. Let's go. All right. Thanks for the ones, Tony, Ben. Good to see you. Okay, so it is my great pleasure today to tell you guys that something that we have been working on for a very long time at Benzinga is finally happening. We've been doing these YouTube shows for a little while now, several months, like 6 months, I want to say, at least in this capacity. I mean, pre-market prep has been around forever. Benjamin, it's good to see you. It's good to see you. And yes, it's weird being here this early. But we've been doing these shows for like 6 months, something like that. And we often get people asking, do you guys have a class on what you're talking about? I would like to learn how to do what you're doing. We get that every show covering different things, whether it's how to look at a company's fundamentals, how to read a chart, how to set up a trade, how to make money from trading. Um, and we've taken those questions seriously, and we started developing an online school to teach folks how to really be confident and better with trading. Because one, you guys asked for it. Two, what we hear a lot when folks come in and use Benzinga Pro, which is our stock research tool, is the best damn news feed on the internet in the world. I'll go ahead and say it. I'll say it right here. And we get folks coming in there that don't have a trading system. Or they're just missing a couple pieces. Like they learned trading because they got let's say a commission free app for trading, and they sort of piecemealed like little bits and bobs from YouTube, Twitter, Reddit, you name it, and they have sort of an incomplete picture on how the markets work and how they can consistently make income from the markets. So that's why there are a lot of courses out there, but most of them are pre-recorded. And most of them don't include comprehensive tools that you can actually use on the platform. So I got to work with a fellow that I met through a mutual friend, Mr. Mark Putrino. He's a charter market technician, which, if y'all know me, that's something that I want to become myself. That's basically like a certificate that says you're real good at reading stock charts. And he's traded for some very serious money managers. So he's got a lot of experience. He's traded on Wall Street, he's traded on Main Street for himself, and he's a great educator. And we put together something really cool. It's Benzinga Trading School. It's designed to have college style courses, like an accelerated college course that graduate you to the point where you're trading almost on your own, but with the ongoing mentorship and guidance of your instructor, Mark. And then after that, you will have developed your own system that matches your needs. So if having a system that matches your unique portfolio that you can rely on sounds like a good thing to have in trading, throw me a 1 in chat. If having a plan that is like a Tootsie Roll on both sides of the Tootsie Roll is tied up on both ends, not just kind of not totally wrapped. If that sounds good, give me a 1 in chat. Because I can tell you that that's what's made all the difference for me, and that's pretty much what makes the difference for everyone. If you don't have a plan that works for you and you don't stick to it with a disciplined approach, you're going to lose money because you're mostly guessing, and that's just not how you do it. So Without further ado, I'd like to bring on that instructor so we can give you a free lesson, give you a little preview of how the school works. And you know what? No matter how long you've been trading, going back to the basics will always make you better. Sitting through this session, watching it and actually absorbing it and thinking about the trades that you might be thinking about or the trades that you kind of wish you could make, will make you better at trading. I promise you. No one is ever graduated from the fundamentals. That's where we live. We're forever students in the market. So I really appreciate you guys being here. And yes, I've got the bedhead thing going on. I used to do the show at 9:30 a.m. But I don't anymore. So at any rate, thank you guys very much. I'm going to bring on our esteemed guest, Mr. Mark Putrino. Hello, sir.
Hey, hello, Neil. Long time
How-
no see.
How are you doing today?
I'm doing pretty good. How about yourself?
I'm doing wonderful. So here we are talking about the trading school and giving a free lesson. Mark, would you mind just giving yourself a full introduction for the folks that don't know you and letting them know what they're going to learn from you over the course of this session?
Yeah, sure. My background is in the institutional trading world. And when I say institutional, I mean big money managers that manage billions of dollars. My first trading job was working for Mario Gabelli. I met him when I was in business school, and he was nice enough to give me a chance and hired me. I spent some time there, and then I moved over to trade for Stevie Cohen at SAC, who most people seem to know from the show Billions, which I haven't seen, so don't bother asking me if it's about it, but it's probably not true. um, then from there, I did a stint at 3 different hedge funds where I was the head trader, or institutional money managers. So we had products that were hedge funds or mutual funds. Um, the industry really changed with the computerization, and it just wasn't a fun place to work anymore like it was when I first started 20 years ago. Just the compliance got out of control, and it just became a different world. So I chose to leave and get into teaching people. I want to teach people about how the market works, about how trading works, about what really goes on Wall Street, because there's a lot of myths. There's a lot of misinformation, a lot of misnomers, and it's not really surprising because a lot of times I watch these financial journalists on television and they don't really seem to know what they're talking about. And then someone says something and then someone else repeats what they say and what they say and what they say and so forth and so on. Um, but I would say the vast majority of the time, 90 to 95% of the time, when you put on the TV and they say, oh, the market's down today because of the Turkish lira. It's like, no, it's not. Does it not? Traders are not sitting around saying, "Oh, look at the Turkish lira. Let's sell. Let's sell." So anyway, I just want to dispose a little bit of the myths and just teach you what really goes on. So I'm just going to show you a little presentation very briefly.
So, Mark, while you're pulling up your chart examples for your lesson, you got it. Nice. Let's go.
Yeah. Hey, man, look at that. So this may seem corny, but I take it seriously. When I first started at Gabelli, there was a money manager there by the name of Howard Ward, who was a fantastic money manager, one of the top money managers on the street. And he, in his office, he had a framed letter from someone that sent him a letter saying, thank you, you've managed my money and it helped me put my kids through college. And Howard would have that on his wall because it would remind him every day that he's got people's trust in his hands. People are relying on him. So I want to have the same kind of commitment to you. I know that you're spending your money and you're going to be using your money to invest, and there's other options out there. So I just want to thank you for putting your trust in us at Benzinga. And I think you'll be happy. So far, we've gotten a very good response because let's face it, most of the trading classes out there are taught by people that have only seen a bull market. You know, all you youngsters who are like 30. like anyway, there's a lot of stuff that's out there that's like, oh, you know, I got this secret system, or I use astrology and this, that. That's really not what it's all about. The serious professional traders were worried essentially about three things. We're worried about what price levels are important. We're worried about what trends are going on, and we're worried about the momentum. If stocks are ahead of themselves, meaning overbought, or got knocked down a little too hard, meaning oversold. So we're going to focus on technical analysis, but we're also going to cover pretty much anything that could happen on Wall Street. If someone has a question about something that they hear on TV that they don't understand and they want to ask, we're going to do that. We're going to talk about things like we spoke about the FedEx earnings when they came out, how they're could be a reflector of the economy. If there's significant economic news out, we'll address that. So in essence, it's technical analysis, but it's also Wall Street too. We can benefit any type of trading style, I believe. Just real quick, a lot of amateurs or beginners think that there's like a holy grail and that the great traders like the Stevie Cohens of the world have a secret formula that they use. But it really just is not the case. That's not how it works. All the AI strategies that I know of have performed really weakly, which is basically just a testament to the fact that math can't, that, oh, sorry, hold on. So there's a lot of things that like math can't solve, right? So the best humans are still better than the top of the quantitative funds. So I just want to look at a couple charts here just to kind of show you the stuff that we're going to be talking about. One of the most important, probably the most important rule of all of trading is that there's certain price levels that are more important than others. All right. Now let's just take a look at Amazon. You can see that this 35.30 level is important. It was resistance here in April, and it was resistance in June, and it was support in July, and it was resistance again earlier this month. Right. So again, you don't need to be a market guru to look at this chart and see that the 35.30 level is important. So then the next question is, well, how could a level that's resistance become support? Okay, this is a common thing in financial markets. You can see it on pretty much almost any chart. The traditional reason given for this is seller's remorse. The people that sold it here thought they did a good job when it went lower. But then when it broke up above their price, a lot of these investors experience seller's remorse and they say, I want to buy my stock back. I made a mistake. I shouldn't have sold it. But I don't want to pay more than I sold it for, because then way I can kind of mentally erase my mistake. So they put their buy orders at the same level that they had their sell order. In this case, it's 35.30. So what was resistance becomes support. Now we can see the next thing, which is the opposite phenomena. Support becomes resistance. This happens because of the opposite situation. This happens because of buyer's remorse. People that bought the stock here thought they made a good decision when it went higher. But when it went lower, a lot of these people come to believe they made a mistake and they decide they want out. So they decide they want to sell their stock, but they're reluctant to take a loss. So what do? They place their sell orders at the same level that they had their buy orders, 35.30. So we can see that support turns into resistance. Resistance turns into support. Support turns into resistance. A big thing about trading, and probably the most important lesson of trading, is knowing which levels are important. It's because this will help you with your order placement. For instance, say you bought Amazon today and you tell yourself, well, if this thing gets up to 3,600, I'm going to sell it. Well, guess what? It might get up here, hit resistance again around 35.30 and roll over, and you missed your profit because you just weren't aware that there was a resistance level there. So just having an awareness of which levels are important can help you with your buy and sell decisions. It can tell you, let the market tell you where to place your orders. Don't just randomly pull a number out of the air. Now, someone had asked about gaps, and it is something we're going to be talking about in the class. I wanted to show you a gap, a pretty cool example of this, and we're going to look at Disney next. There's an old saying on Wall Street, gaps refill, okay? And it's true. And here's an example. When a stock makes a really big move in a really fast time, like, a day or 2 days maybe, it shows up as a gap on a chart. This big long move here is symbolic of a gap. The stock in one day went from 51, around 52, down to around 48. So now think about what happens when, in the context of what I just spoke about with Amazon, all right? The buyers and the sellers' remorse is what causes support and resistance to form. When a stock makes a really fast move like this, there isn't enough time for investors to get in there. There's not enough vested interest. There's not enough investors who bought here, who regret buying, that are going to be placing their sell orders at the same level that they bought at. So what happens when the market gets back up? There's like a lack of sell orders in here. There's a lack of supply. There just weren't enough remorseful buyers here. There wasn't enough time in this big move down for a meaningful amount of remorseful sellers or sellers to get out there and sell the stock. So it creates kind of like an air pocket or a vacuum. So when something gaps down and it looks like it's going to break through back up into a gap, there's a good chance it makes a sustained and big move like AIG did here. So see, gap down, gap up. And now I'm going to show you Disney, which is a gap I'm currently watching. But first, actually, we're going to go back and see a gap here. All right, let me get rid of this. All right, so here's an example of a gap with Disney. All right, see, it just gapped all the way up. Now this is a true gap. There was no trading there at all. So it went from 118, call it, up to 128, call it. So again, there wasn't that much trading activity in there. There wasn't enough vested interest for the remorse to form. Why do we have support? Well, remember, it's because of the remorseful sellers. Well, there just wasn't enough time in here for enough people to sell. So then when Disney got back down to here, what happens? It gapped right back down. It gapped right back through this air. Traders call this like an air pocket. All right. So now this is April of 19 and this is February 20. So you can see this lasts for a long, gaps could fill after a while. It brings us to today, because I know you all want to talk about what's going on around now as opposed to what happened 2 years ago. Now we can see back here last year, at the end of last year, Disney gapped up. Now there's support is formed around the 168 level. And we got pretty close to there not too long ago. But I'm going to be watching this 168 level closely because there's a gap or an air pocket underneath it. Remember, there just isn't enough trading in here for a lot of vested interest to form. I'm going to be watching this because now I'm not going to guess whether this support's going to break or not. I'm just going to watch it. But if this support does break, meaning let me explain what support is. Support is a large group of buyers all looking to pay the same price. There's more demand at support levels than there is supply. So stocks rally off of them. But eventually, if the buyers run out of powder, so to speak, and the demand dries up, the support breaks. Now, I would suspect that if this support does break, and I'm not saying whether it will or not, it's just something to watch on the radar screen, it's going to make a big move down to refill this gap. So this is the type of situation where if you're an options trader, you'd be looking at the puts, and you might have a strategy where if the stock closes below this level, you go along some of the puts. Conversely, if you're looking to buy the stock long term, wait for the support to break, and then don't put your order in until it gets down to the bottom of the gap. So that's just a little look at gaps. That's one of the things we're going to be talking about. Want to take a look at what else?
And Mark, while you're looking at your notepad, folks that are watching right now, if you go below the video in the description, there's a link to join Benzinga Trading School for 75% off. It's for new students only. It's an accelerated college style classes followed by ongoing mentorship, and you get access to a really good chat room system along with full access to Benzinga Pro. So you can get that discount until midnight tonight. The link is in the description below this video.
All right. So one of the other things we're going to be talking about a lot, in addition to which levels are important, is which trends are important. And this is a pretty clear trend in the S&P 500. This is the SPY, or the spider, which is a representation of the broad stock market. And it's really kind of wild how this works. I've spent decades thinking about this, and I still can't completely understand the supply and demand dynamics that cause a line like this to be so accurate. But I don't understand how electricity works, and I know when I turn the light switch, it goes on. So, we don't really have to overthink it. It could be just a lot of people are looking at the same trends. It could be when it gets a little oversold, people buy it. But whatever the case may be, clearly this trend line was tested numerous times. And now this is important to watch because guess what? The trend broke a few weeks ago. So if you were to listen to some of these market people, they've been talking about how the market's had this big move and blah, 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 and everything's great. But if you look at this in context, we're still below where we were a few weeks back. So the point is that something simple like looking at a trend line can really help you by keeping things in context. I've known traders that have actually made strategies off of things like this very simply. Um, Buy when it gets to this trend line, then have a trailing stop of like 1% or 3%. So, in other words, you buy it, goes up. When it comes down a little bit, you sell it, buy it again. When it comes down a little bit, you sell it, buy it again. Very, very simple. Of course, it takes some practice and some experience to learn how to draw a correct trend line, but I'm really confident that you can do it. It just takes a little bit of experience, and you have to. Patterns are easier to understand if you think about them in the context of supply and demand, because that's what this is. That's what chart reading is. All right, it's not like some secret, mysterious, mythical system that we uncovered, in some tomb of an Egyptian pharaoh or something like that. It's just looking at the supply and demand dynamics. People say, well, gee, Mark, that sounds really complicated. Well, it's not as complicated as it sounds, right? If you can think about real estate, if it's a buyer's market, what does that mean? It means the sellers are going to go to the buyers. The buyers have the choice. If it's a seller's market, the buyers are going to go to the sellers. It's the seller's choice, right? When there's more supply than there is demand, the buyers can pick their prices and vice versa. This trend line is just a symbolic representation that the bulls are in charge, right? That's all this is. It's just it's a graphical illustration that the bulls are in charge and they're stronger than the bears. When we see this break here, okay, that could be an early indication that that dynamic is going to change. The breaking of a trend line is often the first sign that a market is going to roll over. Now, it can be a little confusing because trend lines and trends are fractal in nature, right? This is a 9-month chart, but if you didn't know that, it could be a daily chart. So, and also it depends on your time frame too. For instance, a shorter term trader would have had their trend line there, and they would have seen this trend break appear in the more short term than the person with the intermediate time horizon. So anyway, it's not as complicated as it seems. I'm confident you can do it. We're going to be working on this stuff together. Um, I've been looking to do this for a long time, so I'm really glad I met Neil and the Benzinga team. I like having a nice, energetic audience that wants to learn. And people ask me, is there a prerequisite for the class? And yes, there is. It's you have to want to learn. If you want to just check in for like the idea of the day, I mean, I'm going to be giving a lot of ideas and so forth because that's really what this is all about. But I want you to have a desire to learn, and you're going to see things that I don't see. You might have a better eye drawing a trend line on a particular chart than I do. My analogy I always use is if you made Tom Brady a linebacker, he probably wouldn't be that good, although he wasn't that good as a quarterback yesterday. Wow, wow. But I'm sorry, I'm a New England fan, so I have very mixed emotions about Tom
All
Brady.
right, Mark is talking about sports, so it's time to stop him. Hey guys, this is what the platform looks like. We put a lot of work based on your guys' feedback to build a completely brand new Benzinga platform. This is the trading school. And again, this is an accelerated college style course. So just to give you an idea of what that looks like, I'm going to go to the home screen really quick. You can see that we've got these classes scheduled out all live pertaining to what is happening in the market right now, not pre-recorded stuff from 2 years ago that you buy after getting a bunch of ads or something like that, and then you're disappointed because you got some pre-recorded videos. This is live college style classes, homework quizzes, all of that kind of stuff. And you've got your schedule here, so you know what's coming up. Today we just had our introduction and philosophy class. Some of our students are here in chat, so you've seen some of those comments come in from them. You also get full access to Benzinga Pro. So when you join the trading school, you want to make sure you're set up correct. You've got everything that you could possibly need to trade. So you get Benzinga Pro along with your trading school access. So don't think of it just as a school. You do the classes first, then you graduate to ongoing trading with mentorship from Mark. We're going to keep adding to this. This is a new platform. We will keep adding to this. We're working hard to make it even better and better to be the best damn platform for all traders, absolute day one beginners, and multi-year veterans alike. So you're getting your charting tools in here. We are enhancing our technical analysis side of the business. Benzinga hasn't been too great at charting in the past. We're gonna do better, and it's starting right here. And a lot of the stuff that's in here will go into Benzinga Pro as well. But you've got your chat, you've got your charting, you've got your Benzinga Pro, and of course your accelerated college style courses taught live every single day. Well, it's Monday through Thursday, and then you got office hours on Friday with an actual syllabus. So if you guys remember being in school, or if any of you are still in school, this type of document should look familiar. This is the syllabus. I dropped a link for this. This is the syllabus that everyone gets. You get an outline of all of the classes. You get an idea of the timing for things that are going on every day. You're getting trade ideas. So for those of you that want the instant satisfaction of just a trade idea, just give me a setup. Tell me which stock, tell me which entry, stop loss, and all that kind of stuff. We're giving out the ideas. If you are looking for an actual improvement in your performance in the market, I highly recommend investing in this, because it's going to actually make you rigorously and with discipline improve. It's going to give you a path to take, instead of just putting you in an open arena of the internet and piecemealing together a bunch of different trading strategies. And one other thing, and Mark can back me up on this, is the goal of this is not to just give you Mark's super secret strategy, because that doesn't exist. And if there's someone online that's saying they have a secret formula for succeeding in the markets, they're grifting. This is to give you the foundation so you can further develop, create and develop and optimize your own trading system that works for your portfolio, your time schedule, and works for your disposition, your personality as a person. It's different for everyone. There is no one size fits all. There are a million billion different ways to make money in the markets. And the idea here is to take you through the absolute pillars that you can stand on to develop your own strategy, and then continue trading going forward with the ongoing mentorship from Mark Putrino and your fellow classmates. Super cool. So guys, you have a special opportunity before midnight to get into the trading school with all of this stuff that I just talked about at a killer discount. So go ahead and scroll down and click that link to get that deal now. Can't recommend it enough. There is a 7-day money back guarantee, and this sale will not last long. We're also going to end up capping classes. Right now, we had a pretty active chat. I think we have room for some more people, but we're going to cap it really soon based on things getting too busy. And also, we always get this question: if you miss a class, the recording is saved right here for you. So when you're logged into the platform, you will always have the in case you missed it session for the section for classes that you missed. So there is just no reason not to sign up, no matter how good at trading you think you are. So guys, thank you very much. When you go to the page, the full price of the platform is $4,000. That pays for ongoing development with the development team, the support, Mark's time, everything that goes into it, Benzinga Pro, everything that goes into it. But at launch right now for new students, we are deeply discounting that to get you to pay only 25% of that full price. So when you go to that checkout, what you'll see is the full price. Then if you scroll down, the coupon will be pre-applied to that landing page. So that you should be able to see the price that you'll actually be paying, which should be much less than that. Okay, so thank you guys very, very much. I'm not sure if do we have another show after this? Where is Spencer? Pretty sure we can just keep going unless we get a hard cutoff. Guys, do you have any questions for Mark? We can talk about some trade ideas. We can look at some charts. We can look at some tickers you guys might be interested in. And if you have any questions about the subscription, I'm here to answer them as well. And James, Neil, if talking trades is interrupting the class, just say so. Not here to interfere. No. Talking trades, always good. Always good. That's not disruptive. James, you can't. I would never. You're one of my favorites. Mark, do you want to look at socks? Look at some semiconductor action? You're on the screen, just so you know. Everyone can see what you're doing.
All right.
Let's look at SOXX. James. Yeah, no, it's good to see a lot of you folks here. It's good to see a lot of our students here too. Thanks for being here. Shelly, you are a Neil favorite. And so we'll look at stocks and then look at Mark's plan for preparing to buy. A lot of that. So for our students that are here, a lot of that will be covered. So we got a lot of questions today, for example, that are going to be covered to the T, like exactly in the subsequent classes. So like, count on us, trust us. We spent a lot of time developing this course so it answers the questions in the order they need to be answered. All we ask is that you put in the work to improve and spend the time. If you miss a video, watch it. You can watch it on 2x speed, whatever works with your schedule, and you'll get those answers. But Mark, I'm going to pull your chart up really quick.
Okay, this is the socks. So first thing we'll talk about is these. All right, cool. There's a lot we can talk about on this chart. Is these Bollinger Bands. All right, this is one of my favorite indicators because they're so simple to use. So this red line on the top here is 2 standard deviations above the 20-day moving average, which is the default setting for Bollinger Bands. This red line is 2 standard deviations below. Okay. Now, the vast majority of trading these days is done by computerized algorithms and quantitative trading systems. The vast majority of them are based on probability theory, and probability theory states that 95% of all trading should be within 2 standard deviations of the mean. So when something exceeds that threshold, a lot of these computerized trading systems will target it because they'll be expecting a reversion to the average or to the mean. And you can see that pretty clearly here with the socks. See how it got above the Bollinger Band here? This is more than 2 standard deviations. Then it went below 2 standard deviations. It was time to buy. Above, time to sell. You might have gotten a little bit of a whipsaw here, but this is just for informational purposes. We can some traders use a strategy that they don't buy when the threshold is exceeded, but when the reversion starts. So they would buy when the stock, or in this case, the index trades back in here. We can see that it was a pretty good signal here. It was a really good signal here. And this is just basic Bollinger Bands. Like I said, and like I want to stress, it doesn't really need to be complicated. A lot of these people, and Wall Street in general, I think just tries to make things seem more complicated than they are because then they can charge money for it. I don't think that's really a secret. But, this right here, just using a basic system of Bollinger Bands, you could have had a profitable few months trading this stock. Now, I want to look at this RSI indicator on the bottom here too. The RSI is the relative strength momentum indicator. All of these oscillators or indicators come with default settings. All right, like we said up here, the Bollinger Band is based on the 20-day moving average. That's the default. You might play with that a little bit of a stock that you're looking at, and maybe use a 30-day moving average or a 40-day moving average, and maybe it will get you better signals. The point is just be aware that all of these oscillators have default settings. Now, the RSI is one of my favorite indicators because it's very simple. And the default here on the lower side, okay, is 30. The default of this is always going to be 30 on the bottom and 70 on the top. The man who designed this, his name was Wells Wilder, who was a great trader back in the 60s. He invented this, or he developed this indicator, as far as I know. And those were the defaults. But as we can see, we don't really get much of a sign here. So what I'm going to do here is change this default to, say, 35. Actually, let's even change it to 40. All right. So now what do we have? Well, we have a 2-parameter trading system for buy signals. You could say to yourself, I'm going to buy stocks when both of these indicators, the Bollinger Band and my adjusted or optimized RSI, show oversold signals. So we can see this was a good system here, right? When it got oversold here, it was oversold here. That's your buy signal. It was oversold here. It was oversold here. That's a buy signal. It was oversold here. It was oversold here. That's a buy signal. So these are just trading parameters. This is a simple model with 2 trading parameters for the buy. If it's the Bollinger Band is exceeded to the downside. At the same time, simultaneously, the RSI is below 40. That's a buy signal. Some of these artificial intelligence funds and these sophisticated quantitative funds, they literally can use maybe thousands of parameters because they have so much computational power, but they still have not outperformed the best managers. The best systems that I've seen, or the most effective traders that I've seen in my career, they have a system with maybe anywhere from 2 to say 5 or 6 parameters. It can't, that's all a human, I think, should logically consider. And there's no proof at all that I've ever seen that the more parameters, the better. That's why a lot of these AI funds that everyone was throwing money at 3 or 4 years ago have completely imploded, because they just haven't, despite the fact that there's all that computational power and they look at so many parameters, they still haven't been able to beat the market. The best traders that I've met in my career are people that are what we used to call tape readers, that do just kind of what we're doing right here, looking for various opportunities as the market presents them. In the hedge fund world, that's called an events-driven strategy. One day, when I worked for Stevie Cohen, he basically traded stocks, but he has teams all around him that trade all these other different things. And I remember whoever was the precious metal trader came over and was like, "Hey, take a look at this chart of gold." And Stevie like got on the horn with our guy who was on the floor of the Chicago Stock Exchange, and just, man, like literally in 5 minutes he made like $9 million. And he's like, "All right, I'm going out to lunch." But the point is that you're not set or married to a single style. You're open to opportunities as they present themselves. So there has to be a level of flexibility. And I think that the human traders that have the flexibility still, as far as I know, outperform the most sophisticated quantitative patterns. Something I was just looking at this morning, which I missed. I'm not saying I would have bought it anyway. All right, I'm gonna put this RSI back to the default at 30. I'm just laughing here because I was looking at that saying, "Oh, gee, that looks like a good trade," and it's up today. This U.S. Steel, it's up over 3%. Now, why did I see this and say, "Well, gee, that looks like it's a good trade"? And had I placed my trade this morning in the pre-market, I would have made 3% already. So nothing special, nothing magical. Okay. Here's what I'm looking at. The first thing that catches my eye is it's oversold. It's below the Bollinger Band. Okay. The default setting, it's 2 standard deviations below, or more than 2 standard deviations below the 20-day average. At the same time, the RSI indicator with the default settings is oversold. So here's that 2-parameter system. But what struck me too is that the stock has dropped to a level that was previously support back here in July. There was support around the 2150 level. So now we have a 3-parameter system. All right. We're below the Bollinger Bands. We're oversold on the RSI indicator, and we are at a level that was previously support. And as it turns out, it was would have been a profitable trade so far. And we spoke about gaps. Notice how it gapped down here, and we talked about how gaps refill. So I would say I would have gotten in this morning right at the open around 22, and I'm going to have my sell target. This is just for a short-term trade. This obviously isn't like something a longer-term holder would look at, but I just want to explain how professionals think about this stuff. All right, so just to reiterate, so we have a 3-parameter buy signal. We're below the Bollinger Bands. We're oversold on the RSI. We're at support. So that's the buy signal. All right, so we bought it. Now, short term, where are we going to hit resistance? Well, we remember how gaps refill, right? This is a gap here. So there's a good chance when this thing refills the gap, it runs into resistance around 23.30. So as just a short-term trade based on what I'm speaking about, I would have bought this morning around 22, and if it gets up to around 23.25, say, I would sell it. And based on this action, we could probably get there in a day or two. So it's not like we're looking at like a long-term. Um, we're not looking at a long-term pattern here. This is just kind of a swing trade or a day trade. So let me see if we any more questions on anything now. Gold info. Tony C wants some gold.
I'm not
All
sure if
right.
he was saying that your info was as good as gold, but let's look at gold for sure. We actually have until 11, which I'm getting all mixed up on our time. So keep on trucking.
Okay, cool.
And just a reminder, we are getting some questions about the subscription to Benzinga Trading School. That link is below this video in the description area. 75% off, something like that. Some kind of big mega discount until midnight tonight.
Okay, so I want to talk about gold because I was looking at it this morning. I'm actually surprised gold has not rallied more with the inflation that's going on. And I'm wondering if money that used to go into gold in an inflationary environment is now maybe going into some of the cryptos because inflation is just screaming, and we can look at that. This is the CRB index, which is the most widely followed index of inflation. It's made up of, I think, 24 or 28 different commodities, and I mean this thing since last April has more than doubled. And this morning, there's big moves up in oil, big moves up in natural gas. Natural gas is actually trading at multi-year highs. So if you have natural gas, you're not going to be happy when you get your bill this year or bills this winter. But I want to point out this important level in gold. Okay. This is, I'm going to write it down so we know. This is the 1685 level. Now we can see how this particular level, for whatever reason, is important. Let's go back here. This is when I first actually started paying attention to this level. All right, so this is in March of 2000. I guess this is right before the COVID crash. We could see it was resistance. Then it became support. And again, the traditional reason is investors who sold were happy when it went lower, but when it went higher, they have seller's remorse and they decide to buy their gold back. So they place their buy orders at the same level they sold at. And if there's enough of them, it creates support like it did here. Now, let's fast forward to earlier this year in March. We can see that this level once again was important. 1685 is right where we found a bottom. Also here, on this one-day spike down on August 9th, gold, the bottom was 1677.90, so within a few dollars. And that just shows you how powerful this type of analysis can be. I mean, there's no academic out there, there's no fundamental analyst out there that can call where something is going to stop within a few points. At least no one I've ever seen can do that, except for the good traders that are paying attention to which levels are important. So sure enough, when this thing spiked down, a lot of gold traders probably said, "Oh, now's our buy time," because it's been support, going back for a year. I would be willing to bet that if gold gets down to this level again, it's going to spike or see some type of a rally. So here's something else you could have on your radar screen: is if gold gets down to around 1685, we'll revisit it. But that's something you can put on your radar screen to consider buying, based on nothing other than the fact that it's a previous support level. It has nothing to do with the dollar, or, I mean, it depends on how deeply you want to get into your analysis. If you want to talk about how the dollar is getting weaker or stronger, but I'm telling you that there's a lot of commodities traders out there that are looking at the same chart that we're looking at. And if this thing gets down to around 1685, I can almost guarantee that they're going to be buying it. So that's just something else to keep an eye on. I mentioned natural gas. Let's just take a look at that. Fortunately, here we don't have natural gas heat, but heating oil is going up too, obviously. Yeah, so this is an interesting chart here. This natural gas chart. We can see that just since the beginning of the year, it's gone from 228. Now it's at 550. So we'll probably see a little bit of resistance here, just because there was resistance here in mid-September. But yeah, a lot of people ask, this whole is inflation transitory type thing. And, I explain to people, by definition, all inflation is transitory, because all inflation eventually ends, but that doesn't mean it's going to end anytime soon. And as we look at this, this is the chart that kind of really says it all. I mean, this thing is still in a really well-defined uptrend. All right, so let me see if we have anyone. Oh, Mark is laid back. Well, yeah, that's cool.
Let's see if we can pull some tickers. So we've got some folks that are talking about their trade. So James is in GREE. Want to take a look at that one? And then after that, let's look at uranium. Just overall.
Ooh, well, this.
Are you bottom fishing, James? I like your style.
Yeah, I mean, it's hard for me to really give it a technical opinion on this, because in order to have supply and demand dynamics in the market, it really needs more of a trading history. That being said, you can always look at a shorter term chart. This is a 1 month chart, and it looks like there's some good support around the 25 level. Probably because that's a psychological level. People say I'm going to buy it if it gets to 25. So yeah, it looks like it might be forming a little bit of a bottom here. But again, if it just doesn't have the trading history, it's harder to do the technical analysis, because technical analysis is based on, in a lot of ways, where things used to be or were at one point before.
James said we literally picked his highest risk position in weeks. Hey, it's okay to throw a lottery ticket in every now and again, but let's do one that's less lotto. Do you want to look at URA, which I believe, is that a uranium ETF? It's got to be, right?
URA. Okay.
Yeah.
All righty. Well, we can see here that there's going to be some resistance. This is another good example of how certain levels are more important than others. So let's just look at this $24 level. All right. So we can see how it was support here and support here. Then it was a little bit of support. Then it was resistance. It was support here. And now it's back up testing this 24 level. So I think you're going to see a little bit of resistance here at 24. But considering the inflationary environment that we're in, I bet you there's a good chance that this thing breaks and makes a move higher. Yeah, so that's what I see when I look at this one. I would just pay attention to this level right here. See, that's right where we hit resistance today. And this is what I mean about the clearness of these levels. Like, no academic could ever explain this. Like, if efficient market theory was true, this wouldn't have happened. But we can see right here looks like 2405 was the bottom back here, and that's right where it is hitting resistance as we speak. But like I said, given the inflationary environment, my best guess would be that this breaks this resistance and moves ahead.
All right, so there you go. There's uranium. Guys, give us some tickers in the chat. Oh, do you want to look at lithium? I like a lithium stock. Can you look at one for me? Can you do LAC?
LAC or EC?
A.
This must be pretty oversold. Yeah.
You're in the 30s still, just FYI.
All right, so what do we see when we look at this guy? Well, we can see it's testing some short-term support, but it looks like we had a nice rally off of it today. Yeah, see, it opened around 2062, and now it's around 2141. So it's up about $1. So I would be watching this short-term support here. If this thing was to break the support, where would we look for the next level? Well, at the level that was previously resistance, as we've been speaking about. It's 1935. So I would think if this short-term support breaks, next stop would be 1935. But again, it's had a nice move up today, and we are in an inflationary environment. So these things could longer term keep trending higher. Oh, here's also this is also an interesting observation too. Is we can see an importance of, and again, it's not really, it's rare that it's exact. It's usually around, like, I might say 24, but it's not precisely 24. It's around 24. We could see, we had this big move up here for whatever reason in January, January 19th. But then we can see there was resistance around 24. And here we are 9 months later, and you can see the resistance. There's a resistance around 24 once again. So this chart is a good illustration of what I've been saying, and what you're going to hear over and over and over and over in this class is that certain price levels are more important than others. For this particular stock, we can see that $24 is important resistance. Now, if lithium moves up and breaks this resistance, there's a good chance it will convert into support. And then we would look at that from that perspective.
All right, so you can see we got a couple about Ford. I think it might have been the same person, but not, so ticker F, Ford Motor Company.
Yeah, wow, that's making a nice move. All right, again, here we go with, again, blah, 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 resistance, support, resistance. But hey, that's the fundamentals, and that's what you always need to tell yourself. So now let's just look at this 1340 level for Ford. And I actually wrote about this on the Newswire. In March, it was a clear resistance level, right? That's where this rally that began way back here ended. The stock went lower, hit a little bit of resistance, but broke through it. So now we have the remorseful sellers, the people that sold here, say, I made a mistake, I want to buy it back. Fast forward to July, and guess what? When the stock came down, the 1340 level was support. What was resistance became support. It was support in middle of July and then in the first part of August. Then the level broke, and guess what happened? 1340 became resistance. So we go from resistance to support to resistance. But now, over the last few days, Ford has broken this important level, and it looks like it's in a nice uptrend. Might be a little bit overbought, but now that it's cleared this important level, that's a real bullish sign.
Do you want to look at LEV? Oh, actually, hold on. So yeah, let's look at LEV first.
LEV? Right.
Yeah. And then Apple.
The Lion Electric Company. All right. I like that name. Haven't heard of this company though.
Neither have I.
Alrighty. So what would be the important level here? We can see like how this was support 14, call it 1435. See how it was support here, it was support here. So if this thing keeps trending higher, and right now it's in an uptrend, and the trend is your friend, as they say, as long as it stays above this stock, it'll be trending higher. But my guess is there's a good chance that this support at 1435 turns into a resistance level over here. Now, that's not to say that it's going to roll over and go down. It could mean that it gets up to 1435 and just spends some time consolidating. Like if you're bullish on this stock long term, it's really not anything to worry about. But if you're a short term trader and you bought the stock down here, this is up around here around 1430 would probably be a good place to take some profits. But if the situation was bullish longer term, it could break this level, but it might take a couple weeks or two, which is why I said for a shorter term trader, they would probably sell it and look for something else to put their money into that's going to move, as opposed to just consolidating, if that's what's going to happen before it keeps going higher.
All right, so we've got AAPL and we got James asking for redemption, which I'm still considering to look at BABA. But let's do Apple. If you're a bull on Apple right now, give me a 1. And I'm talking over for a trade. I'm not talking about for an investment. If you're a bull on Apple, give me a 1. If you're a bear, give me a 2.
All right. So here again, we can see the phenomena of which levels are important, and then an idea of why this was going to break. So we can see this was resistance, right? So that tells us there's a good chance it's going to turn into support, which it has. Now, what's kind of interesting about this chart is, say the stock is rallying here, and you look back and you see, well, in January, this level was resistance. That means there's a good chance it's going to hit resistance again. Will it break the resistance? Well, one of the things that traders look at are things called lower highs and higher lows. All right. This here is a low, obviously. Stock went down. Let's call it 120. This here is a higher low. Okay. Because when markets go up, they form higher lows. They go up like a stairway, like I said before. So what this means is that as time has passed, the buyers have become more aggressive. In other words, the buyers have been willing to pay higher prices. So the stock formed this low in March. The next low that it formed was in May, but it was at a higher price. It was around 126 as opposed to around 121. So that's an indication that as time passes, that's what this arrow means, time is passing. As time has passed, the buyers have become more aggressive. So this could have been an early clue that when the stock got up to this resistance, it was going to break it, because higher lows is a bullish dynamic. And again, back to our level discussion, what was resistance became support. And we can see that here too on Apple. So yeah, that's the story with Apple. This support seems like it's kind of important. So if it breaks, now this would be a good example of like where we can get a price target. So let's assume this breaks. All right, the support breaks and it's going down. Where would you want to buy the stock? Well, you would want to buy it at the level that was previously resistance. So that's 135. So my guess is that if this resistance break, or the support breaks, and it did test it today already. Today's low was 143.82. So you can see it's really close. My guess is that if this support breaks, and Apple trends lower, the next stop will be down around 135. So a couple things going on in this chart to look at.
You are welcome for the analysis. So, okay, what do we got? What do we got? You want to look at SAM? So collective subconscious productions. I like that. It says SLI is a new lithium company, according to Kramer. Just interesting. Kramer,
Which
you might
one?
know. I don't know. SLI is a new lithium company.
I got excited when you're talking about Boston Beer Company.
Well, Sam. That's
yeah, I got
Boston
a couple.
Beer. All right,
I got a
let's
couple
go.
Sams up in my refrigerator right now. As a matter of fact.
There you go. That's an investment.
Yeah, we could see the gapping a little bit here. Not a perfect example, but see how Sam gapped up here and then gap down over here. That's another example of a gap getting refilled. Looks like there's probably going to be some support around 500 because that's a nice round level, and people like nice round levels. But I don't know. Do you know the symbol of this lithium company?
SLI.
SLI. Oh, okay. I must have looked at. Oh, yeah. This is actually in one of my lessons. This is in our patterns lesson. Let's see. Let's get rid of this thing. So this is in my lessons, but I wrote it before this move. But it was an example of like a V top, and if I remember correctly, we got a good sign from the volume. Let me just bring up the volume. All right, this is something we look at too, which is kind of an important lesson. Is a lot of times turning points are marked by big spikes of volume. It's a capitulation almost when it happens at the bottom. So one of the interesting things here about this big move here with this V top, and a V top is obviously just an inverted V. It's a spike as opposed to like a triple top. It's like a single top, I guess you could call it, for argument's sake. But one of the signs that this day was the reversal, okay, was this big amount of volume that traded. See this volume? I mean, this is way more than typically trades. So that's a sign that the buyers finally were sick of chasing it up, and they tell their brokers, just go buy it at any price. I don't care. And that just rockets it up. And the big sign of volume that occurred at the spike was a sign that the tide was turning. You could also see it a little bit with this bottom. So now let me guess, Kramer recommended this, and this is why it's up trading high.
Who knows?
Well, like you see how there's a lot of volume on this day, but there's really kind of no follow through. And today, like hardly anything is traded. It's generally not a good sign when you see a big spike up like this with a big volume and it doesn't keep going. So I don't know. This is probably one personally I might stay away from it.
Les wants to know what percentage of the time does a gap get filled?
I don't know if you could put a hard number on it, but I would say a good amount, maybe half, maybe 60%.
I think that's even conservative. Honestly, I think it's, in my own experience, and I'm not the teacher on the course, I'm just the teacher's assistant, or as someone called me today, the hall monitor for Benzinga Trading School. I see them almost always get filled, so I would say like 80%. But
yeah, I mean it could be more. Yeah, it could be more, but generally, gap refills are a pretty reliable thing to look at if you're looking for trading ideas.
There you go. All right, thanks for the question, Les. So for looking at the week, what is your favorite right now? whether it's an ETF or a stock or a group of stocks. Let's talk about like perhaps a watch list, considering what's going on in the markets right now. What are you interested in, Mark, yourself?
Um, I all right. Well, the main thing that I'm watching is, first of all, there's a lot of like stuff going on, right? In politics, you got this potential government shutdown, and the government's going to run out of money, and blah 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 blah. Um, you got inflation or some headwinds. You have seasonality, and October is usually a fairly weak month. Um, so I'm just for the stock market, I'm gonna just watch this here and see, are we going to go into consolidation? Is it going to keep rebounding? Because this little like rebound really seems to be running out of steam. Okay, like we took off last week, but we're basically right where we were just a couple days ago. The market really hasn't moved, and when you get a big sell off like this, you tend to get a big spike back, and this started to happen, but it hasn't really happened. So I'm kind of thinking we might be on the cusp of um, not necessarily a big sell off, but maybe a little bit of a correction or some sideways trading. I don't think we're going to be ripping back to all time highs in the near future.
All right, guys, questions about stocks, charts, concepts, and technical analysis, anything, let us know. We are wide open here for Q&A. Questions about the subscription we can also take right now. If you guys want to see that really, really sexy, amazing new platform that we got for Benzinga Trading School, we could do that. And here that is. If you guys get in now, you can join us for a midday update every day, well, Monday through Thursday, at noon Eastern time, which the time is wrong here. I'll have to talk to someone about that. But we have our midday update. So it's a regroup, any questions that you had on the class from the morning, and then looking at the day during halftime, so we can approach the rest of the day with confidence and with knowledge backing our decision making. So yeah, if you guys get in now, go down to that description. You should be able to join us for a midday update. Depending on when you get in, there's plenty for you. Awesome, Manny. It's great. I'm glad to hear that you're learning a lot. All right, sweet. So this is a really good one to go into. If I thank you, follow who, Mark. Do you want to please talk about reversal patterns? Do you have any examples lined up for reversals? I know we just did the V, so we already got one, follow, which was the V top reversal there on SLI. But you guys are digging deep into lesson 5 on patterns here from the trading school.
All righty. So yeah, we are going to talk about where are we the slideshow? This is the patterns class, which is the 5th class. So we're going to teach this on Monday. And again, the classes reoccur. I get the sense that there's a little sense of confusion about how the classes work. There really is no end, right? Unless I get hit by a bus or something like that. We're going to go through the classes, and then we're going to recycle them. So, for instance, on this Monday, I'm going to be talking about patterns, and we're going to go through this lesson. But then we're going to look into the current market at current patterns that are forming. 2 weeks later, when we get to this lesson again, I will give probably the same lesson, but then we're going to look at the market at that point and look for patterns. So it's an ongoing class, and it's I think a good analogy is karate or taking golf lessons. You don't just go to like one lesson or 2 lessons. If you really want to learn, you really should stick with it. Now, that being said, I don't think you're going to need to spend the next 7 or 8 years doing this. I think in a month or two, it'll really change the way you look at trading and should help you with your investments. So yeah, so here's our patterns lesson. Did I speak about the head and shoulders, or was that before, Neil? I don't even remember.
I think you got to Head and Shoulders this morning, but we didn't talk about it here.
Okay.
But click. Can you like click somewhere so that like see how you can see like the 4 PowerPoint presentations on the bottom? Can you like click your toolbar or something so those disappear? Just left click your toolbar on the bottom, like the start bar. That works. Yeah, click it. There you go. Now click back in your presentation. Boom. Windows, everybody. Windows.
Cool. All right, so I'm going to talk about the head and shoulders pattern because that's a well-known pattern, and this is a pretty instructive picture of it. We can look at a couple of them. So a head and shoulders pattern is a reversal, which means when it forms on the chart, it shows that the trend is going to reverse. Therefore, a head and shoulders pattern needs to come at the end of a trend. If a market is just trading sideways and something looks like a head and shoulders pattern, it's not. A head and shoulders pattern has to come at the end of a trend. So we spoke, I believe, about how certain levels are important and how what was resistance can turn into support. Excuse me. Resistance turns into support because of seller's remorse. And this happens a lot when markets are rallying. People sell only to watch their stocks go higher, and they have seller's remorse. So if we look at uranium energy, we can see that there was resistance here, but then the stock went higher. So a lot of these remorseful sellers say to themselves, I'm going to buy it back. So they put their buy orders at the same place that they sold it, because a lot of these investors say, I'm going to buy it back, but only if I get it for the same price I sold it at. So we see here this resistance turns into support. The same thing happened up here. People sold here. They thought they made the right move when it went down, but then the level broke. Now we have a lot of remorseful sellers that say, I'm going to buy it, stock back if I can get it at the same price. That level turns into support. We see this once again. This level around here was resistance, went down, broke through. That level becomes support. Now, this is the key to the head and shoulders pattern here. What was resistance did not become support. Okay. That's the, I guess you would call that the right shoulder. But it's not important to remember the patterns. What's important to remember is watching this bullish dynamic come to an end. Resistance to turning into support is a bullish dynamic. The head and shoulders pattern shows that dynamic is coming to an end. So the bullish dynamic is not happening anymore. We can see a similar thing here in ClearSign Technologies. Resistance was here, became support. Resistance here did not become support. And then I'm not sure where the stock is now, but I know it went into like a big move lower after this. But again, the bullish dynamic of resisting, converting to support has ended. And that is a sign that the trend is coming to an end. Let me just, yeah.
Hey, Mark, one more remark. We've got about a few minutes here, and then I want to wrap us up talking a little bit more about the school.
Okay. All right. Well, all right. So I'll just end on this then. So now this is the inverse head and shoulders pattern, which is the opposite. When markets are going down, there is buyer's remorse because people buy stocks and then the stocks go down and they regret buying them. So in the stock market, levels that were support convert into resistance. So we see with AT&T that happened here. This support level turned into resistance. This support level did not turn into resistance. So that was your bullish sign. That was your inverse head and shoulders bullish sign, as it shows the end of a bearish dynamic as opposed to the regular head and shoulders pattern.
Well, we got a pretty special person with us today. Give me a 1 in chat if this name sounds familiar. His name is Rodrigo. Give me a 1 in chat if you've been knowing Rodrigo. Give me a 2 if that's new. You're about to make a new friend. Mark, I'm going to pull up the trading school on my screen, and I did point out to our developer, who actually is watching right now. So shout out to our lead developer on this product for catching it and updating it. So yeah, I mean, this just goes to show you we are actively putting our best efforts and best people on Benzinga Trading School. This is gonna be the best damn thing we've ever made. Oh man, oh, here we go. Steven knows. Oh man, Kraft is ready. Rodrigo. One been knowing. Steven is just Steven's excited, doesn't know him. Kraft is best friends. All right. So some of you been knowing Rodrigo, some of you not been knowing Rodrigo. All right, so let's bring on Rodrigo. Why? Because Rodrigo's a trader. Rodrigo is a madman. And he started off as a Benzinga user, and then he joined the Benzinga team. You guys should too. You guys, if you want to join the Benzinga family and you guys got something that you can offer, you can always email us. And if you're looking to be on the Benzinga team, join us. We love people that know us well, use our stuff, and we want folks that trade. We are traders. We produce things for traders. So for traders by traders. Rodrigo.
Good morning. How you doing?
I caught you yawning.
Yeah.
Hey, so we are doing a deal. And I just wanted to make sure that folks understood the trading school, and like why you're excited about it, and why they should be excited about it.
Yeah, well, the trading school is really what kind of changed the way that I trade, because if you don't know how to read a chart, I mean, you like even as an options trader, because I trade options, like you're not going to be successful at trading if you can't read a chart. So the chart is the language, and if you can't read it and you can't talk it, it's going to be harder for you to be successful in the long term. It doesn't matter what strategy you have. You need to be able to read charts properly, and it goes a little bit deeper. And it's pretty good that Mark has been a CMT for, I think, like 20 years. So that's the kind of person you do want to learn when it comes to technicals. Like I've had some pretty badass trades with Affirm calls. Neil knows that. I just got in Affirm calls again today, Neil.
I'm not surprised. I saw the candle being up and I was like, Rodrigo's in here.
I'm totally in it. I'm totally in it. But it's all technical analysis, really. Like I'm personally a momentum trader. I do like to trade momentum. I do like to get leverage, which is why I do the options. But it really doesn't work if you can't read a chart. Let's say, because otherwise, like you have no business asking about delta and what is a call if you can't read a chart. Like you're skipping so much stuff. And this is really the fundamentals, regardless of what your strategy is. Reading a chart is like the most basic thing, but it's not only that, but you also get Benzinga Pro, which is the best tool out there. And literally, like when I pull these trades, I'm looking at my Pro. That's all I do. I have my watch list set up. I have a watch list for short squeezes. I have a watch list for smart money picks. I have a watch list for my trading week, which is where I got into Affirm. So I was doing my technical analysis inside Benzinga Pro. You have trading view charts there, which are second to second. Other brokerages that I'm not going to name, they're like 40 seconds delay. They'll tell you it's real time, but that thing's pretty slow. So with Benzinga Pro, you get second to second charts, and that's really good because you want to be able to find a good entry, right? And if your data is delayed, like it is in almost every brokerage I know, you're going to think you're getting a sweet deal and the stock already tanked. So definitely minute to minute, second to second charts help. Also, the fact that you have Benzinga exclusives, which is when we release PRs, those are other trades that I do. The exclusives, we have the only scanner that's open pre-market, meaning 4 a.m. and after hours, and we aggregate data. You can aggregate data, you can filter it basically through those filters. Every other brokerage only filters through regular trading hours. So if you're starting to scan the market after it's been open for 6 hours, you're behind the 8 ball, no doubt. But definitely Pro is something you need to have. If you haven't used Pro ever, like you got to use it. It's definitely going to change the way you trade. You're going to be a lot more analytical, a lot more strategic in your trading. It's not going to be whatever's trending on StockTwits or whatever that is, You're going to be able to get in before it trends. Why? Because you have access to really fast news like MRIN. I was able to get a good trade there. Why? Because I have my watch list set up in Pro. But the school is really good because, like, honestly, the introduction is important. A lot of people, not only they have to learn, but other people have to unlearn because they learn things that weren't like correct. But But yeah, I'm definitely pumped about the school, Neil. I'm definitely pumped about Mark. I was listening into the class today. It was very, very good, like very good content from Mark, no doubt.
Yeah, no, today was awesome. So I want to thank everyone that got up bright and early and is putting time into their education, for being there and for coming here to support us on YouTube. Because I know there are a bunch of students here with us right now. So, Kraft has a really good question. So what's the best introduction to Benzinga Pro? I'm getting overwhelmed trying to figure out where to start.
Okay.
Yeah. Go ahead, Rodrigo.
Well, I mean, the first thing that I would do, man, is build a watch list. Okay, everybody should take notes of this, right? How to use Pro like a pro. All right, build a watch list. Okay, you can build as many as you want. I have one for my trading week today. I have a couple stocks there, a firm being one of them. I have different watch lists for different things that I want to do. Like there are certain stocks that I really am long on that I'm not trying to trade. So, I have a watch list for that. And whenever I see something that's down a lot, it could be a good opportunity to build a position there. But yes, build your watch list. That's the first thing you want to do. Have different types of watch lists, right? One for the trading week, maybe like tech stocks or EV stocks or whatever you're into. It's really good to separate and filter those things out. So once you have your watch list done, I want you to go to the advanced newsfeed, and I want you to filter the newsfeed by your watch list. Okay, you're able to filter. Like I have another watch list that's like 200 stocks, and that's like my universe of stocks. There's a lot of speculative plays there, a lot of EV stuff. Like I throw anything in there, right? So this way I don't get distracted by whatever headlines you're seeing out there. The market's going to throw you this, that, the other thing. You really need to be focused when it comes to trading. So building your watch list, then go to the advanced newsfeed, filter that newsfeed by your watch list. Okay. That's how I'm able to keep up with like over 200 something stocks, because I just wake up in the morning and I just do a quick glance of what's going on. Okay. This company did an offering. This company did an acquisition. So I'm pretty much like on top of what these companies are doing. And that, you trade your portfolio. That's pretty much what I like to do. So the advanced newsfeed, you can filter it, by your watch list. You can also filter it by Benzinga exclusives. Like the watch list is like the best tool. That's what I use the most. So then you filter it by Benzinga exclusives, and then you're only going to get like the PRs that we do. So whenever a company comes to Benzinga, they're like, hey, I have some news I want to break with you guys. And I want to do it with Benzinga because you guys represent the retail trader. I want to get my message directly to you guys, right? So they do a PR and they release news, and then you get that news like right away in Benzinga Pro. So you just have to filter it by exclusives. That's all you have to click on the filter. And you will get, there's a certain data lag between that information appearing in Pro, because that's our system, and then that appearing in another brokerage, because there is a certain time. So you obviously get, I guess you could call it dibs or whatever, but BBIG, a very well-known stock, we PR'd that like when it was $2, AEHR. I think Luke interviewed the CEO when it was like a couple dollars. Right now it was like 17. ALF, we did a PR when it was like $2. It went all the way to 22. There's definitely a lot to trade. You can also filter that newsfeed, right? And these are going to be separate news feeds that you're going to have. You have a separate news feed, and you can do that other one by analyst upgrades and downgrades. And that's what I do. I have my 200 stocks that I told you about earlier, and then I filter that news feed by my watch list and by the analyst upgrade and downgrades, or initiations or terminations, whatever it is. So the other thing, these are all trade ideas, guys. Like you,
let's talk a little bit more about the trading school. So you get Benzinga Pro in there, and actually, if you have questions about Benzinga Pro, live support will hook you up. We also have a pre-recorded course that will like turn you into a power user on Benzinga Pro that Ryan Faluna has done. So a lot of you folks are already familiar with him. But Rodrigo, so like talking about daily trade ideas, talking about market updates in the morning and the midday, which we're about to be doing, and all of those things that come with the trading school. What do you like about that?
Well, what I like the most about trading school is Mark. His background, his experience. That's really what makes the class better, I could say. I mean, because, you go to college or whatever, you got, lazy teachers, people that just, go through a slideshow. And then you got these other type of teachers that are super passionate, that really want to teach you, that have been successful, have done it. And, they've been around, they walk the walk, they talk the talk. So considering Mark's background, I'm really happy that he's head of the educational section here at Benzinga, because it is important. Education is important, like, it's only so many times it's not even funny, like you guys blowing up your account, all that stuff. Like, we need to avoid all that stuff, but by avoiding, you need to get the education to avoid that. And learning how to chart with Mark is the best thing. It doesn't matter if you're doing options or just trading the stock or whatever it is. Like, you need to get good entries on your trades, period. Otherwise you're going to be negative, and that's not what you want. So being able to read charts like Mark, who is a CMT, that's going to be the best route to go when it comes to, trading ins and outs and all that.
And there you go. Spencer's here to tell us that this special free class session has ended. I just want to remind everyone that you can go down underneath the video and you can get, Born to Be Free. That's right. Speak it, Rodrigo. Amen. Go below the video and grab that discount that will expire at midnight. Get on in there. 7-day money back guarantee. Try it out. Get in there. We will get to a point where we can't take any more students. So now is the time. Spencer, what is up?
Spax Attack is live. We got to end the stream. We got to keep the train on time. That's what I'm doing here. So everyone smash the like button for Rodrigo, or even better, if you have to pick between the like button and the link in the description, do the link in the description if you have to choose one. There it is. Benzinga Trading School, Mark Putrino, Rodrigo, the man, Neil Hamilton, and that's a wrap. So the next show is going live, Spax Attack, with Money Mitch and Chris K. And we'll see you guys there. This will be the first of 2 special trading school streams. The next one being tomorrow. So
Be there.
Or
be square.
Be there. That's what it is.
All right. Thanks, Spencer.
All right.